Nick, I'm going to start with EL. Hopefully, yeah, it looks like they're on your list. You'd expect Estee Lauder, of all companies, to be a classic case of pricing power. What happened here?
Yeah, absolutely. They'll be reporting tomorrow, actually. The reality is they have a lot of exposure to China. And so when you think about lockdowns happening, that's obviously going to be a weight on their top line. And we'll probably hear that from them tomorrow. But the stock has corrected way more than I think earnings will correct. And I suspect that what's happening in China, though it doesn't feel like it's transitory, will end up being transitory. And we should start seeing the growth resume once the China situation is resolved. So
that would be a name you're actually more constructive on, though it's been in the red. What about Coty, sort of sticking with the space?
Yeah, I mean, I was on the show, not too long ago talking about, my view on where you should be really placing your bets, and that's companies that are levered to mobility. That's certainly one of the reasons why I liked Estee, though the China lockdowns obviously got in the way. But when you think about Coty, here's a company that's really turning around its business. They're going from market share and shelf space losses to now stabilizing and actually gaining market share in some brands. And as we all kind of get out and about, especially over the next several quarters or several months, you should start seeing the beauty category look a lot more attractive than what we've seen historically during the peak of the COVID situation.
What's the improving sort of level of excitement about Coca-Cola all about? Is it? I mean, I'll tell you, I think Coke Zero is really good.
Yeah, I mean, look, they spent a lot of time trying to figure out that formulation, and every tweak they make, it gets closer and closer to the actual Coke original. Look, the bottom line with Coke is you have some new management that came in several years ago. They've really tried to broaden the portfolio footprint to focus on all beverages, not just carbonated soft drinks. And then the carbonated soft drink category is actually stabilized and is growing with a high degree of pricing power right now. And so when you think about my earlier comment about mobility, Coke is also a mobility play. 50% of sales come outside the home when you think about their channel exposure. And we haven't even recovered on mobility in many parts of the world, like in Asia and Europe. So there's still a long tailwind of mobility benefits to happen for Coca-Cola, which is one of the reasons why you're seeing the stock do so well year to date.
Keurig Dr. Pepper is a pick. That I always thought of kind of the stay-at-home play, right? The Keurig pods, although then you have the soda piece of it on the go. As you address that, Nick, also, what would you do with some of the grocery names like Kroger?
Yeah, well, I don't cover grocery, but let me come to Keurig Dr. Pepper. I mean, this is a company that's gaining a lot of market share, right? And so you're right. It is kind of a hybrid at home, but also away from home, depending on which category you're talking about. But they're gaining so much market share. They've delevered their balance sheet. They have enough balance sheet capacity to potentially do another deal. And we've seen the last several years that they are very good. At least this management team is very good at doing deals. And so if they do a deal, I think it'll be favorably received by the marketplace.
All right, so there we go. Your playbook for consumer staples. Nick, thanks for your time.
You bet.